Again, gold's making new all-time highs. What do you make of the precious metals market right now?
Yeah, I mean, gold making all-time highs. It's the 34th of the year, all-time highs. You got BRICS, all the BRICS nations buying up gold, and that demand, it's not stopping. It's not going anywhere. They're buying it at a record pace, and I think that this is just beginning. It's broken through resistance levels, of course. We're at all-time highs. It continues to march higher and higher and higher. And how high it goes, I don't know. I think bull markets go higher than anyone thinks possible. I think that it will be tied to a new system. But in reality, what I think it is more than anything is a realization that central banks around the world do not have the appetite for our treasuries any longer that they once did. Not only are we proving to choose inflation instead of letting the underbrush burn, letting Mother Nature clear everything, we're meddling again and lowering rates and reigniting inflation. That's why the bond market sold off and rates on the 10-year have been going higher, because they understand this. But of course, as we've talked about incessantly and ad nauseum, it's the weaponization as well, where we are, taking $5 billion in assets from Russia and buying weapons to give to the Ukraine. Our policies are making countries around the world want to own things like gold instead of owning our treasuries. Not only has it doubled the performance of the 10-year, has no counterparty risk. And you're right, you look at silver. And by the way, on COMEX, on the LBMA, London Bullion Metals Association, you're seeing roughly two times global market production traded every day in London. They have way less metal behind these trades. About 90% of these trades are paper trades, and if called on the carpet, it creates a very big problem. There's not even enough gold in the exchanges to come up with to deliver if need be, but more so in silver. Let me look at the numbers here. You mentioned that silver made a 12-year high. It's true. Closed up 6.5% on Friday. And what's going on with silver is ridiculous. You have 3.5 times global mine supply annually traded every day in London. There's 800 million ounces in the entire LBMA vaulting system, of which 500 million belong to the ETFs. That leaves 300 million ounces there that could be delivered. Well, they're trading 2.9 billion ounces a day, which is 3.5 times annual mine supply, 10 times what is available, 90% of which is paper. 8.1% of all of that silver was delivered in the month of August, as these countries are standing for delivery. And you got analysts like Bank of America saying that gold will be 3,000 by next year. You have 3,100 by Goldman Sachs. You got Michael Hartnett from Bank of America saying that gold bull driven by policy and inflation. Investors simply need to hedge inflation and threat of U.S. dollar debasement. Gold heading well above 3,000. I don't think we've even begun to see where this ultimately goes. But silver is the value of a generation, and I think the entities around the world understand this. You have China, as I mentioned on your show before, going around the world buying concentrate and doré bars directly from the Latin American refiners. They are paying way more than the West will pay for it. They bring it home and refine it themselves. It's not purchased off of an exchange, which has a material effect on the price they're paying and on how much they're really accumulating. They already are the second largest producer of silver in the world. They have become a net importer this year instead of net exporter.
We talked about all of these ambitions, and that's fantastic, but the current gold price does not, in fact, provide enough liquidity for Enbridge and the unit to fully roll out. For example, Luca Groman points out that when the petrodollar came to be in the 1970s, the oil price had to more than 3x to provide enough liquidity for the US dollar. That was then, and that was oil. So what does this mean for gold? Just the idea of them looking to do this.
It means that it's needs to be higher in terms of its dollar price, for sure. I mean, and we've had the head of the Dutch National Bank talk about this for quite some time. And ironically, in fact, you can't make it up, Michelle, gold is held on central bank balance sheets and accounts called the gold revaluation account. And, you know, the head of the Dutch National Bank says, look, we got all this money in the revaluation account that we currently cannot offset against our liabilities, but why don't we revalue the price of gold and do just that? Because in Europe, gold is on everyone's balance sheet at 35 bucks an ounce. In the US, it's 42.22. I would guess they valued it last and did some legal declaration sometime in the early 70s, right after they set it free from its $35 an ounce price. But that is what it is on the books of the US government. And, you know, it makes a lot of sense, actually. And we saw that with Roosevelt over my shoulder there. That's what he did. He confiscated gold, he revalued it, and by 40% by depreciating the dollar. And it takes on a greater significance in my mind when we see Cynthia Lummis, the senator from Oklahoma or from Wyoming, who got up on stage at the Bitcoin conference just a couple months ago in Tennessee, where Trump said, yeah, I want to build a Bitcoin strategic account. And she said, yeah, I want to float a bill that revalues the gold that the Fed is holding on behalf of the Treasury to a level high enough to buy Bitcoin for this account. And, you know, in a world where, and by the way, Luke Gromen is one of the smartest human beings on the planet. I try and follow everything that he says, and I agree with him. But in a world where Bitcoin, and, you know, Michael Saylor, I think I've watched that interview you did with him. He'd be the first one to tell you it goes to 150,000 or 200,000 or a million, right? So why can Bitcoin go to 150,000 but gold can't? Why do we think that's okay and the other isn't? And I would just simply say, you put gold at $150,000 an ounce, as crazy as that sounds, your balance sheet now is pristine, goes from putrid to pristine like that. And who's to say we couldn't do it? We'll just tell every country on the planet, send us your gold, we'll buy it. We'll pay $150,000 an ounce for it. That is what it is. I mean, in China right now, silver's $4 an ounce higher than it is in the West. That is what it is if you can deliver it there. My point is, if they did that, and they did that, it would behoove who? Well, all the central banks. They're the ones buying it all. And if it is indeed going to be part of a new system, and we're trying to put all of these systems together, a common system, as we were talking about, wouldn't it benefit the common system if it's all going to be tied to gold and blockchain? Then it would benefit everyone. And now you not only have a balance sheet where all of your money is not going to exponentially increasing interest payments, but instead to maybe trying to pay down the debt. Yes, it creates inflation, but it will never come back down at that point. That's why guys like Jim Sinclair, God rest his soul, always said, gold will go to a level no one thinks possible, and it will be pegged to a new system and never come down.
I don't know where the local currencies will fit into all of this. If indeed there is a big point made about holding responsible your own monetary house, keeping it in order and trading with one another in local currencies, but for settlement, why then you can use the unit settlement token, which will, all of it will be pegged to the price of gold. So in terms of rebalancing, all of these fractal units will not have to be independently rebalanced. You rebalance the whole, and the whole then is a mirror image of the fractal units. But those fractal units are immediately convertible into gold at any of the nodes at any time. And so you add legitimacy to a system that is now pegged to gold and not to any one central bank currency. But when I was talking with Vince, I don't know, a few months ago, he said something that really was very interesting. And he said, you know, wouldn't be surprised to see countries like China loosely peg their currency to gold to have that competitive advantage. And you kind of see that right now. You kind of almost see that with Russia as well, that they are, you know, really making a concerted effort to not only massively accumulate gold and silver and do so in a very open way, where Russia says we're now going to increase our daily acquisition for the next month or two from 1.12 billion rubles to 8.2 billion rubles for at least the next month. You see China flying all around the world buying concentrate in doré because it's unrefined and they can buy it, pay higher than the West will pay, and buy it kind of off grid, so to speak. You see Saudi Arabia straddling the line, buying 160 tons of gold and getting caught by not reporting it to the IMF, and the import-export numbers from Switzerland kind of flagged it. But when you see, China buying tremendous amounts of gold through proxy banks or through the People's Liberation Army, or buying it in doré form, which isn't 995 pure, none of this is reported to the IMF. They are the largest producer of gold in the world, the second largest producer of silver in the world. Russia is going out of their way to not only buy gold, but they're the first country to say we're buying silver and we're going to increase our purchases of platinum and palladium. This is a drive, as Zoltan Pozsar says, to buy commodities. And all of this is done at the expense of the US dollar. And when you look at from their perspective, why would anyone want to hold dollars that are being inflated away with money creation running at least at 7% per year, if not greater? Why would they want to hold treasuries that are being, that are very volatile? First time in 45 years last year was more volatile than gold. And gold has doubled the potential, or the performance rather, of the 10-year treasury for the last 25 years with no counterparty risk. I think all of this fits into the equation. So what do I expect to see? I expect to see exactly what Vince said, a more concerted effort to trade in local currencies. I expect a more concerted effort to de-dollarize and replace the dollar holdings and the treasury holdings with things like commodities. More trade arrangements made in local currencies in an expanding union, where Delma Rousseff said 59 countries have formally thrown their hat into the ring. Now, will we see which one of those countries, who they are? Maybe. Probably we'll see some. Will there be any admitted? Maybe not. I don't know. Because largely what these guys said, they got to get their house in order first and make sure this is done the right way. I hate to be the bearer of bad news, but something's got to change. It has to change. This irresponsibility that we have shown the world, this recklessness, and this whitewashing of our culture that people around the world are, I think, shocked as to what has happened to the beacon of liberty and freedom and justice. It's gonna create something that's gonna wake up some people. And you don't have to be a genius to understand that it's happening. It's accelerating. Not to go off script, but you look at this BFTP program, right? This program,
the bank term funding program, yeah,
right, and it's due to end. All of the liquidity pulled out of the market the day after the election. Now, the conspiratorialist in me would say, well, they're setting up Trump for a rug pull. Because if you look at every other time that the Fed has pulled liquidity out of the market, bang, the whole thing collapses.
Locks up, yep.
The day after the election, it's due to come to zero. And if it weren't for this program a year ago, what would have happened? We'd have seen a massive bank failure, a cascade of bank failures, a run on the banks. And this is something that I think is going to happen anyway. I think they're going to set up one of the big banks to be bailed in. And that is the moment right there when the public says, my goodness gracious, what is a bank bail-in? Now what? They all lost everything, our neighbors. It's gone. And that's when you see everyone run to the banks. That's when you see a bank run. That's when things start to get real quick. And I don't know, there's a fine line between conspiracy and reality, but I don't know. It just seems that people are too complacent right now. And I'm a little freaked out with the BRICS meeting coming up next week, which I don't expect to be earth-shattering, just some clarity. But more importantly, the election. And I think the real freakiness comes after the election.
On Friday, the First National Bank of Lindsay was closed by the Office of the Comptroller of Currency, with the Federal Deposit Insurance Corporation, the FDIC, approved as receiver. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud. Well, hold on one second. Let me just back up one quick second. Remember when Silicon Valley Bank and Signature Bank failed? They were bailed out illegally. Well, maybe it's because Oprah Winfrey and a bunch of tech startups and some very wealthy, influential people had their money in there, but it was bailed out illegally, and they had a massive amount of uninsured deposits, right? Insured deposits would be within the FDIC purview, the $250,000 per individual account, and anything over that's uninsured. No one's ever worried about that before. Pro athlete with $30-40 million a month in paycheck, they're not worrying about it. Put it in the bank. And so when it failed and when they failed and were bailed out, it was ironically the senator from Oklahoma who questioned Janet Yellen. Madam Secretary, you just bailed out these banks. It's illegal. The Dodd-Frank Act says that won't happen again. You're right, Senator. She said it was an uber majority vote between myself, the president, the FDIC, and the FOMC, which is the Federal Reserve. We deemed it to be too systemic, so we bailed them out. Not at the expense of the taxpayer. The FDIC will cover it. Right. The FDIC has 148 billion in assets, backing 18 trillion in deposits. It just depleted their reserves that much more, and you'll see that here in a second. So it's ironic. And well, the Oklahoma senator says, well, the Madam Secretary, if a bank fails in Oklahoma, will my constituents be made whole? No, sir. Has to be an uber majority vote again of that same core four FDIC, FOMC president, myself. Okay, well, let me get back to the story. This is in Oklahoma. The OCC acted after identifying false and deceptive bank records and other information suggesting fraud that revealed depletion of the bank's capital. The OCC also found that the bank was in unsafe or unsound condition to transact business, that the bank's assets were less than its obligations to its creditors and others. So let's just highlight that for a moment. The OCC also found that the bank was in unsafe or unsound conditions to transact business, and that, now remember this, the bank's assets were less than its obligations to creditors and others. Let's just say that one more time because this is the important part. The bank's assets were less than its obligations to its creditors and others. Now, who the hell are others? Now, remember, depositors, you're the last in line to be paid. So creditors come first. And, you know, you're an unsecured general creditor. You're not the primary creditor and the others. So let's just keep that in mind. You see the biggest hotel in San Francisco, they just give the keys back to the bank and say it costs more to run this place than it does than it's worth. So here, take the keys and any equity that's with it. And all of the restaurants and the bars and the stores and the shops that spring up around it, even places like Whole Foods and Macy's and Walgreens, they're all going bye-bye. And as they leave, then the quality of life for the people who live there becomes less and less. And so they want to leave. And as more and more people leave, you get less in the way of tax revenue. And so then you see a denigration in the services, trash collection, responsiveness in police and fire and ambulance. So more people leave. And as a result, you get more businesses closed. It's a doom loop. And at some point, that doom loop has to really negatively impact some of these bank balance sheets, which I think starts off the cascade.